Hello traders, this is Mike Billion. Today is March 27, 2017, and let's talk about the market. Let's start with the three index. Let's start with S&P, which is the spider. Right here, as you can see here, we have a bounce after it went right at Fibonacci 231.50. It bounced, but it wasn't enough to break out the 5 simple moving average. It's making lower lows, DMI is bearish, ADS is strong, so I think look at this support right here. It doesn't offer a lot of support. It's not like this one. It was resistant for 3 months. So this one is the major support, 227. So if you're looking to go long, this is not a good support to go long. The major support is at 227 and it should be your target if you are short, because there bears will have a problem breaking this support down. So for now, the spider is bearish. And I'm going to show you the Dow Jones using the DIA. This is the Dow Jones Industrial Average ATF. And you can see here the major support is at 200 because it was resistant for 3 months right here. And right now it's making lower lows, and like the spider, it couldn't get about the 5 simple moving average. DMI is bearish and strong. The Russell, using the iShares Russell 2000 ATF, you can see here it break down the Fibonacci 133.35, but it finished about the level. It bounced during the day, and you can see finish about the 5 simple moving average but below the 21. So this one is not as strong as the Dow Jones and the S&P because ADX is below 20. So this one might move sideways here and eventually go to this trend support, but it will do it slowly. So it's better to go with the spider and the DIA because the ADX is higher than the IWM. So I prefer the other two for sure. JP Morgan is doing the same as the DIA. Is looking to go to 83 Fibonacci support. It was support back in January 19. We bounced from that level and we test the 93 level and it fails. Now it's heading to that level 83. Possible this trend line right here 80. So this one is bearish and strong. So be careful going long here because it's not at support. AMD, it break down this trend support, but ADS went down. So that calls my attention because it was high and it went down below 20, meaning don't if you're bearish in this one, this thing is not gonna go down. It's not gonna go down fast. It's just gonna move sideways here, probably for a couple days, and because the volume is so low when it went down, we might bounce very hard from here. So be careful shorting this one because the long-term chart, if you see the whole chart, is bullish. And now that it went down and break down this support, the ADS tank, meaning there's not a lot of buyers selling this one. It's just small buyers, not good volume. So I wouldn't short this one. It's not good, but for now it's neutral. But because also if you are long using auctions, you're gonna suffer because time decay. So it's better to not have a position in this one and wait for another opportunity. Now let's talk about Caterpillar. Break down this major Fibonacci multi-year support. And now I'm looking for a confirmation. I will enter this trade below 90. I wouldn't enter here. It's too close to the Fibonacci 89.91, which is 90. And the confirmation is right there below about that level. So I will wait until go down below 90 to go short. But for now, it's bearish and it might be a nice breakdown if we break down also the 90. Now let's talk about GG. Let's talk about gold. I use GG to trade gold, and it calls my attention that it's heading to the major trend line resistance, which is also the Fibonacci resistance 17. So if you break out the 17, it can be a beautiful trade because this one moves very nicely when you get it into a trend. So if you break out here, I think it's gonna go to 21, possible 25. So keep an eye on this one. DMI is bullish and strong. The other one that I want to talk about is Lulu is gonna report on Wednesday, and it looks like it wants to go up right here and touch this trend line, but I think it's bearish. But I will hold my puts for the earnings, because it might, earnings is gambling. It might go up, it might go down. It's high probability that it goes down because the company went up last time and it didn't hold, just moved sideways slowly going down. So I would say it's 30% probability that it goes up and 70% probability that it goes down. But I'm not holding a position before the earnings, because, as I said, it's more gambling than a good trade. Now let's talk about Netflix. Netflix bounced after it went down to 140, and it bounced and finished at 144. So it overperformed the market today and touching the 144.62 level. So it's right there trying to break out the DMA 21, but it's at the top. This major support 144 is high probability that it fails again, and my target is this gap. But it's not going to happen in the next coming days, but eventually it's going to happen. There's a gap here also. There's two gaps. So I think it's going to go down eventually. Just give it a couple weeks and it will go down very nicely. So now let's talk about Starbucks. Starbucks is heading to these major trend lines when it has been making lower lows, which is bearish long term. And if it goes there, it can be a nice trade, because every time it goes to that resistance, it goes down from, let me see, 159, 5 or 4 points. So it's a good trade. We're talking about 10 to 12%. Every time that goes there, it fails, and it goes down 12 to 10%. So, and you can use this trend line as your stop loss. If you go short right there, what do you do if you break out? You get out and you go alone, and it can be a nice trade because it can go to $63 also. So that one is my watch list for this week, and see what happened. Now let's talk about Tesla. Tesla, as you can see here, breakout major Fibonacci, which is the bottom of the gap, at 266. It was a weird move because it was not connected with the S&P today. It was totally different. It was trading with the S&P the last 3 days, but today it went up by itself and break out the major Fibonacci resistance, which it was my stop loss. I get out right there, and now it looks like it's gonna close this little gap at 272 and probably go to the major multi-year resistance 284. This resistance here has been resistant for almost 4 years. So you got to be careful there, because every time that goes there, it fails. But if you break out 284, I'm going to get into this position, because this could be a major move to $400, $500. And because, this move has been trading $100 and between 284 and 285 for 4 years. So it probably is going to move $100, not in one day, but I'm talking about moving in a couple of months, and it can be a nice trade and you can use the same 284 as your stop loss. If you fail, then it's gonna go down. So for now, Tesla is now bullish after this breakout, this triangle wedge breakout. So let's see what happens, and also the trend line is still intact. So this trend line is gonna be support also. So it has a lot of support for you to go long. Traders, I have a nice promotion on my website. We only have 5 days. Friday, this promotion is going to be closed. You can join McBillion lifetime. Only one-time payment, and it's very low. You can enter McBillion. You can get my videos. You can get my mentoring. You can get my trade ideas and my updates, video updates. So check it out. Join McBillion. This is everything for today. Trade on.